What you're about to see in this video should become a regular practice for you. Analyzing your trades is fundamental. It's essential at the beginning of your journey because you need to spot your mistakes and see your trades from an outside perspective. Observing how you behaved in a trade from the outside is a must. I encourage everyone to record their trades and analyze them because there are subtle points that even I still discover, and I only record my trades because I have a YouTube channel. And to share them with you, I only stopped doing it for myself, but at the beginning of my journey, I did it all the time. Literally hundreds of gigabytes of trade recordings, and it helped me a lot. So I highly recommend you do the same. Now let's get started and analyze some trades. But before we begin, don't forget to subscribe to this channel. I put in a lot of effort, I show everything as it is, and I look forward to your support in the form of a subscription. Thank you very much. Also check out my free Telegram channel. Now let's go. So I have a list of my trades from one trading day. A couple of trades are missing here. You'll see a screenshot on the screen in front of you. This was my trading day. And one trade was from the morning of another day, and it was a loss. After that, I slowed down my trading. With these trades, I managed to make over $1,000. And now let's figure out how. Of course, it wasn't without mistakes and losses. As you can see from the screenshot of my trades, I didn't include the trades with very tight stop losses here because they're just not interesting. There's nothing to analyze there. But there are some coins where there is something to break down. So let's get straight to the point. The first trade is on the AVNT coin. You can see it, right? And what's happening here? I'll draw it for you now and bring you up to speed. Here we have a trend line which at the moment we break through, yes. And what's going on in my head at that moment is very important, right? What am I thinking about? What do I see? I see that the trend line has been crossed and I missed the first entry point. What does this mean? The downward structure is breaking and an upward one is starting to form, or at least it's very likely to start forming. My task, since I missed that trade, is to catch the breakout from the consolidation that's happening upwards, or to catch the retest of that very break, meaning the retest of the trend line. So to catch the retest, but there's also an entry point from the lower boundary of the consolidation and to take it upwards. Since there was a long break in trading, there's an emotional state of fear of missing out on a move. I tried all three of these options, and all of them ended up being losses, even though they showed some profit at first. That's a little spoiler, and now let's take a look. And I'll walk you through step by step what I'm doing. I enter in the middle of the consolidation and the coin starts to... Here the order book is stretched out, you can see the volume. Here with a very small volume, since the entry point is unreliable, I reduce the size and I set it closer to the lower boundary to accumulate. The order book is stretched out, it looks like a big loss, but it's actually just half a dollar, $2 because the trade size is only $3,000. The coin starts to approach and gives an exit, but I don't accumulate because there's a high probability of a pullback, so I just stay put. Well, if it gives $50, it gives, but it doesn't. Instead, it rolls back toward my placed orders of $1,000 each. You can see, yes, I get filled for another $2,000 at the lower boundary and we're holding the position. Here, I stop out as you can see because it starts to cross the lower boundary. But on the 1 minute chart, we can see that it came to the low after the breakout, kind of started to roll back from here, bought up, so this is the second approach to this low. From here, I will re-enter because I'm counting on an exit upward from this consolidation. That is, we bounce up from the low and give an exit, continuing the movement. So we still have the option that it might break through now, in which case I'll need to step back, wait for the actual trend line retest, and then enter. Plus there's a small consolidation here. Yes, you can see it, and the retest will be the final one. Here the price is already moving and I'm in for $6,000 because the entry point is more interesting from the lower boundary, and here it stops me out again by stop loss. My stop here is about $70, $50, $60, somewhere around $70, yes. And the first time, let's take a look. Well, although you'll see these trades in the screenshots, and it tests the trend line, so what should have been done here? What was the mistake? Basically, the first entry point was fine. There was no need to make that intermediate entry from the 1 minute low. That is essentially on the 5 minute chart. There isn't even anything to take a trade from here. The 5 minute chart is still more important than the 1 minute chart. The 1 minute chart gives us, as I mentioned in previous videos, a clearer stop, And here on the 1 minute chart, I came up with an entire basis for my entry. So the fear of missing out on a trade is an emotional state, right? You're not in sync with the market and you try to take trades one after another. But I correlate this with reduced position sizes. That is, if I realize that I'm not confident in myself at the moment, I lower my position size so that it doesn't hurt financially. And this works well for me. After that comes a test of the trend line. This was a good entry point, a test of the trend line and the consolidation. And here on a good bounce, you immediately see the reaction. I enter and I measure it out. You see, I move my mouse to see the wick of this candle so I can set my stop just beyond it. So this is where my stop will be, and I'm expecting a good move upward with an update of this high right here, the one I'm pointing to with the mouse. I set my stop behind the wick of the candle, and let's see what happens next. So basically the coin gives an exit here, right? And you either had to enter here the first time, or after this failed attempt, enter on the retest of the trend line with the proper working position size. That is with $100,000 to $150,000. But I'm still getting into the swing of things, so I'm being cautious. And as practice has shown, I'm doing the right thing because the coin doesn't give any kind of exit. It just gives a reaction. If we had entered initially from the trend line, there would have been a decent good profit here, but we entered for the third time, so we had 3 attempts, and here it just couldn't make it. There was a new high, and then it started to roll back, and at that point there were a couple of options. Either close the position during these pullbacks, but I was already, so to speak, sitting it out, if I can put it that way, just going all in, either stop or profit. And this back and forth with the market leads nowhere. The pullback has no strength, and here basically the probability remained that it would break through, but it was already small because the candles were swollen, red, impulsive, indicating strong selling. And here I should have closed out. I ended up with a loss of $100-something, about 130 or so, and that was the end of that situation. Moving on, and here the coin is much more interesting. What do I see here? After I open the coin, I look for interesting levels. First of all, there are these highs on the 1 minute chart, a big consolidation on the 1 minute, but it was also visible on the 5 minute. And here, highs are accumulating, and we also have an uptrend on the coin, and we're moving along it. We also broke out of a local consolidation. You can see a very local consolidation, yes, very local, and we break out of it. I skipped this entry point. I should have entered here, waiting for a small pullback, and I opened my position with the prospect, of course, of catching the approach to the high. Why the approach to the high and not waiting for a breakout? Because on the second approach, the first approach was already made. On the second, there's a high probability of a false breakout and a pullback, and I keep that in mind. That's my main strategy for bounces in a calm market. But now, the market is still forcing us to squeeze out good moves. Even with a small volume, you can make money because the market is moving well. You need to look for good entry points, and if you miss a good entry, either look for a way out of the situation or wait for another opportunity. So let's take a look. And the coin, by the way, is definitely worth watching, specifically this coin, 1.6 million trades and 184 million in volume. So the coin is starting to get a lot of volume and a large number of trades, meaning there are a lot of participants. And here, a small pullback begins, as I already mentioned to you, and that's where I open my position. I open my position and set my stop loss just beyond the wick, right here on the open position. So the stop loss here is very tight, and I wait for the outcome. I wait for the outcome at the first resistance. Look, all the trades, pay attention, are only for $11,000, but the profit is already $645. At this point, I add more because I can set my stop loss to break even, so I'm completely safe. And before my stop loss at break even, there will already be a decent move. I add another $5,000 so that I can approach the high with it. And as you can see, the coin approaches nicely, pierces the high, and right here I close my position as expected. After that, the coin started to roll back. Yes, 2 hours later it updated the high, but why should I wait 2 hours if I can take $1,100 here? I take it successfully, and that's it, a good illustrative trade, but I could have entered right here on the breakout from this consolidation and taken 1% more. The next trade is on the SFP coin. I said I didn't add them, but it turns out I actually put them in this folder here. And here the exit is basically the same, essentially just like in the previous trade. There are local levels, but they're still very small. There's very little more here. I wanted to catch this breakout from the consolidation, but first it took everything down. Basically, I entered from the lower boundary, from the lower trend line of the ascending channel, plus the coin is having an active day. It's in play, and as it approaches and breaks through, I close the position. Then it pierces the previous low and the consolidation, and here they buy it back. I open a position and immediately set a stop loss just beyond the wick. That is, if I'm trying out some unreliable situation, I do it with a reduced volume and a tight stop behind the previous candle's wick. Because if the movement starts to reverse and goes lower, I won't participate here anymore. That's it. And as it approaches, basically I get stopped out. The stop here turned out to be about $120. Let's move on. And this coin is actually on the previous one, yes. And here it formed local highs again and is consolidating off the ascending trend line. So I'm trying to correct the previous mistake with this consolidation to catch the entry point from the breakout of the consolidation itself. Here it is, the consolidation, just like it was here, right? And now I'm waiting for a breakout from it, considering that it's also bouncing off its lower trend line. Plus, you can see there's an active order book below. They're adding bids from below. I've marked the liquidity clusters in purple, and they're constantly adding more from below. In fact, these bids later push the price up to new highs. But in this situation, I take the trade, I wait, I hold, and here I already take off $500. I take some profit off the table so I can just sit in the trade calmly and not worry about anything. The trade is running, and I mark the next high as resistance. As the price approaches it, I close my position with a profit of another $1,200 on top, which is very nice. And here, I didn't try to be stubborn, as they say, against these highs. Whether they'll be broken or not is unclear. And this is a very important mistake. At one point, I missed this error. When we approach a key level is a strong high or low. We're already holding profit up to it, right? We've entered earlier. We're holding profit up to the key high or low. And it's key because it's unclear whether there will be a bounce or a breakout. If you watched the video on the Gushka, we discussed what to do in such situations. It's better to close the position, take the profit, and if there's a breakout, try to re-enter with a tight stop. If it doesn't work, you get stopped out for a small loss. If it works, you catch more profit on top. In one trade, this tripped me up. I didn't close the position. Let's move on to the next coin. Well, here, for the guys who are trading, everything is quite clear and obvious. There are these significant highs and a clearly defined local trading level. And here the task is simply to catch the breakout up to this high. So there's a good consolidation. We've squeezed up to the level after several attempts, and as we press against it in this range, I enter a position for $15,000. The coin wasn't anything special, it did grow well, but within the trading range it wasn't very volatile. I immediately enter with $15,000, which is pretty good in general, but for me that's a reduced volume, because I'm just probing the market. It's only my first day back after a break. And the coin starts moving, then begins to pull back toward my stop, and then starts moving again. We hold the stop, we don't move it anywhere. And it goes for a breakout here, gives $260, but there's no strong impulse, no real surge, there's no stop hunt or any kind of sharp move. So I decide to close the position at the round number of 0.47. After that, maybe an hour later, the coin started to move up again, then pulled back once more. So I would have been stopped out anyway if I hadn't closed. So, looking back at the history, I did everything right. Just a good exit. We caught a small impulse and took profit. We covered the previous small stop loss. Although we covered them with some good trades, here the coin is pressing up against its trend line. It's the same coin, Ian, but there's also a trend line below. And the coin is pressing up against the trend line. I enter at the moment of consolidation near this trend line. I enter with $10,000. It's pulling me in. It's pulling me in. Then it goes for a retest and I added on the retest and close my position here in the moment. So let's watch, and right here, I'm about to add on the retest. I added another $5,000. You see, now it's $15,000. I try not to exceed that amount. in more reliable setups, later on I've already started increasing them. I'm already trading with my normal deposit, but that day was the very first day. Here I'm adding to my position. By the way, here it is, $20,000 already. And from the lower low. So as it happened here, the coin started to go above the trend line, approached the marked low, and from there I re-enter. That is, if you take short trades, don't hold them for long. But in this market, you really need to squeeze out the percentages because we have a lot of entry attempts, but then they get offset by that one attempt that gives you $1,000+. You close your small profits of $100, close your stop losses because your potential comes out to 1 to 7, 1 to 6, 1 to 8. That's the kind of market it is right now. So there's no point in picking at short moves. And with that in mind, I'm sitting here, even though I could have already taken 2 or 3% several times, you see. And in the end, the coin here just wobbles around and gives $500 there. At one point right here, you see it was giving 480, 460, and I didn't close the position, hoping to catch a good move. But the coin started moving sideways and headed toward my stop loss. It went to my stop loss. And that's it, the trade was closed just below that very low and with the break of the trend line. So the structure changes and the coin's movement reverses from upward to downward. There's no point in sitting and waiting for a miracle, hoping it will go our way, even though it's breaking through all its upward trend lines. And here's the next trade I mentioned, where exactly that mistake was made. What do we see here? That very mistake. You'll understand which one in a moment. What do we see here? On the coin, there are local highs on the 5-minute chart, that is, on the 1-minute chart. They're even more pronounced, and the price approached them. The coin grew by 25% in a day. You can see it here, up by 25. The coin is active. There's a lot of volume coming in, almost 200. Of course, for this market, that's not super high, but there are 1,900 trades, which shows the coin is active. Locally, there's this upward trend line, and that's where I enter from. That's where I enter. And now, let's see what happens here. What's the potential here? The first target, of course, is just to approach its previous highs, to reach the highs, and that's exactly where it's heading. Yes, I'm adding to my position here and holding. Look, the first mistake in this trade was that after you add to your position, you need to set your stop loss to break even right away, immediately. That's the only reason we add to our position. We add only when we're already completely safe. We've added set the stop to break even, and we're not risking anything, that's it. But to add and then not set the stop like I did here was actually stupid. But we're all human, we all make mistakes, right? The coin is approaching its highs, it's getting close, and honestly I really believed in this breakout. At this point it was giving about $200 to $300 on $15,000, and we're still in the position. After that I add to the position again, even though I should have stepped back here, because after adding you should step back. The coin starts breaking through its trend line, and for some reason I'm still holding the position, expecting some kind of bounce from these lows, but these are just minute lows, you shouldn't pay attention to them. Still, I'm holding because the previous day, this is already the next day, I had a good profit the day before. Of course, I'm sitting there thinking that I can afford to give away $500 of the $2,000 I earned to try. No big deal. It's okay. It's actually scary. Why? Because for a reduced volume, $500 is already a lot. Look, it shouldn't have been like this here. I'm standing here at 20,000 and there's a stop over there for about $400 or so. That's how it is. I'm closing it, you see, right? I closed the position below the low. I figured that if this low gets taken out, then that's it. There will be a reversal. And that's exactly what happened. The situation reversed. And what was the main mistake here? There were two of them. When approaching the high, right here, when approaching here, I should have just closed the position. Wait for the consolidation and take a good exit. I didn't do that, and that was a mistake. After that, when I added to the position, I should have immediately set a stop loss at break even. That way, I would have closed here at break even and without losing anything could have gone to look for a new setup or waited for these same highs and caught the breakout. So, the desire to take profit right here, once you're in a trade, you feel like you have to get something out of it right here, but sometimes you just have to let it go. Break even isn't scary, there's nothing to be afraid of. So, that's the video, guys. Thank you so much for watching. I'm really glad you're here with me, and for those who watch this channel without subscribing, make sure to subscribe to this channel and to our free Telegram channel. I'm also currently working on developing a large platform where we'll be able to interact together specifically for the guys from my team in VATAGA. Just register using the link in the description, go to the VATAGA team section, join my team, and soon it's going to be really useful for you. There will be, well, I won't spoil anything, but it's going to be awesome. I'm looking forward to seeing everyone. See you soon, bye.